Welcome to the Invested Dads Podcast, simplifying financial topics so that you can take action and make your financial situation better. Helping you to understand the current world of financial planning and investments, here are your hosts, Josh Robb and Austin Wilson.
I'm not a pro. I'm a horrible speller.
All right. Hey. Welcome back to the Invested Dads Podcast, where we are bringing you an important update surrounding the coronavirus, also known as COVID-19. And Josh, we have a special guest with us. So who do we have?
That's right. Today we have Adam Zuercher with us. He is one of the founders of Hicks and Zuercher Capital Management and also one of our bosses. We have two bosses. I can't tell you which one's my favorite because I'm not sure who writes my checks. But Adam is here today, and he is the Chief Investment Officer and would love to come and talk a little bit about the coronavirus and how that's been impacting the markets. So Adam, why don't you tell us a little bit about yourself first?
Sure. Thanks, Josh. Thanks, Austin, for having me on your podcast today. Very excited to share the thinking out of Hicks and Zuercher Capital Management. We've been meeting, it seems like around the clock, whether it's in the office or virtually from our homes, using all the current technology to keep in touch with each other throughout these crazy markets. But so my story is back in 2002, I left a CPA firm after working there for 3 years to start this wealth management firm. And as we'll talk about later, we were actually in a bear market at the time, and
Seems timely.
not much different than the circumstances we're in today. So I have some experience with this, and I'm looking forward to sharing some things I've learned over the years. So my experience goes back to 1999. So I'm in my 21st year and been working with clients all those years. And so my business partner, Tony Hickson, and I, we founded the firm in order to help people create wealth, protect wealth, achieve their financial goals. And we just saw a huge need for guidance from a fiduciary fee-only financial advisor. And so the two of us started with 0 clients, 0 assets under management. And we started in 2002. So this coming year will be our 18-year anniversary. And over the past 18 years, we've been able to build a team that I'm very proud of. And as we talked about last night, it's amazing just the level of care that our team has for our clients. And so I can't wait to share the thoughts that are coming out of our office and the way we're helping clients and that sort of thing. But so today we manage, depending on the day, somewhere between, let's just say 160 and 180 of assets under management, 160 to 180 million. Serve over 200 households, mostly individuals and families, some institutions. And we're just here to help people. We want to guide them through these crazy markets.
All right. And you are an invested dad as well, like Austin and I. So tell us a little bit about your family.
Yeah, well, I have 3 awesome kids. My oldest just turned 16, and I will remember her birthday, her 16th birthday forever, because the S&P 500, the last all-time high was February 19th. Her birthday was the 20th.
There you go.
So I don't know if she's the one that triggered this bear market, but
the driver's license.
The panic selling is the new driver on the roads.
Lots of new things happen in my life. So I have my 16-year-old daughter, I have an 8-year-old daughter, and I have a 7-year-old son. So it's awesome being an invested dad, and my family is one of the greatest joys of my life, and love spending time with them when I'm not in the office.
Yep. What are one of the things you like to do with them?
Our favorite thing to do, and we just talked about this last night, is boating. So we have a wake boat, and we're getting into surfing behind the boat, and wakeboarding, surfing. The kids love to do anything in the water, whether it's swimming, going to the beach, or just being out on a boat. And wouldn't we all like to be out on a boat today?
That would be great.
There's no virus worries out on a boat.
I wouldn't think so.
So, Adam, we had an episode a couple weeks ago where we talked about the coronavirus at a pretty high level. Things have changed a lot since then. And I thought we'd give you the opportunity to kind of share the latest developments around the virus.
Well, yes, it's amazing how fast things can change. Just yesterday, both the S&P 500 and the Dow plunged nearly 10%.
Big move.
Now, you've seen, the psychology of nines, I call it, so when you go to buy something, It's on sale for $99 or $999. Yesterday, the Dow dropped 9.99%.
Yeah.
So
should that make you
They
feel
didn't
good
want to see
or-
the 10.
Yeah, should that
it
make you
wasn't
feel
10.
good or bad? I don't
I think it looks better than a 10%
better than 10.
drop.
It
See,
does.
The
So-
news was calling it 10,
Yeah.
and I knew it wasn't 10.
Yeah.
Not quite 10. And look what the futures are doing this morning. Here we are. It's Friday morning. It's about 8:30 a.m. And the futures are up strong.
6% ish.
Yep.
Trading curbs on the futures. So
Yep.
people are anxious to buy. So that 9.99% discount is a buying opportunity.
Exactly.
Anyhow, yesterday, that was the worst loss for stocks since the crash in October 1987.
Daily.
Daily.
Yes.
Yes. Worst daily drop, worst point drop for the Dow
Correct.
ever. Yesterday's historic decline ended a bull market that lasted nearly 11 years. So as I mentioned before, the S&P 500 hit an all-time high on February 19th. We're now down 27% from an all-time high. And in that big drop from February 19th through yesterday, I believe it's the fastest bear market on record.
It seemed pretty quick.
It felt like it. Yeah, it definitely did.
I think the speed of the decline has a lot of people really shaken. I
Right.
mean, they wonder, wow, how fast can we go? How far can we go and how fast will it happen?
Yeah.
And you wonder if some of it has to do with technology, the ease of trading now for the average investor. I could place a trade on my phone instead of picking up the phone, calling somebody, asking them to place a trade. It's a lot easier for me to make that quick decision and not have to talk through with somebody else before that trade happens. So maybe that's part of the issue as well.
And the big boys, think about it. The big
Oh, yeah.
boys have electronic trading and automatic trading,
pushing
and
buttons.
high frequency trading, and all these triggers are automatically triggering trades. So yeah, I think it could probably compound the speed that we've seen.
Absolutely. So between computer driven trading and then just the ease of trading, I think, in some cases it might be too easy.
Yep.
But also very convenient. Technology has made it convenient and it's given us the ability to act quickly when we need to.
Yeah.
Unless you're on Robinhood. I think they've been having some trouble lately.
They've had some troubles. There's some lawsuits coming.
It's amazing there hasn't been more of that, with
True.
some of the other brokerages. But
Yeah, well, even some of them have that in their description, or when you sign up, you agree to.
Right.
Sometimes they will limit trading.
Exactly. So, then we had the Fed getting involved here over the past week. So last week, I believe it was a week ago Tuesday, the Federal Reserve, they had an emergency rate cut of 0.5%. Then yesterday, they also took very aggressive steps by flooding the market with $1.5 trillion of liquidity and widening their purchases of U.S. government securities. So the Fed has taken some really aggressive steps to help keep markets liquid. And, yesterday's news, the market popped for a little bit, but not for long.
And
It
it
was
sold
right
off
back
after
down.
that,
Yeah.
right.
So, I think that the market isn't quite, too excited about the moves they've made so far. I think they're expecting more. And I think you can expect more from the Fed.
Yeah.
They have a meeting planned for next week.
The 18th.
And we certainly expect them to lower rates more at that meeting, if not before.
Correct.
And do you think this is obviously the Fed is really looking at the economy? The market is a representation of the economy, but they're looking at like flooding all that money into what's more liquidity for the banks, making sure that businesses have that cash.
Right.
And what the stock market does should be irrelevant to the Fed. They should be looking at what the economy needs and adjusting it that way. And then hopefully then the market will respond to that, what the economy is doing. But hopefully the Fed is indifferent to what the market's doing and only doing what's needed for the economy and giving what's best there, not responding to any kind of pressure to help the market recover from its down.
Exactly. Yeah. The Fed's job is to worry about the economy, to keep the financial system liquid. And I think they're doing the right things. But yeah, you're right. They shouldn't be making these moves just for the sake to prop the market back up.
Yeah.
Right. And I think that it's good to keep in mind that before any virus uncertainty happened, so think about through January, through the beginning of February, really, at least here in the States, the economy was doing phenomenal. We just got, last Friday, we got jobs report for January, which was amazing. It was just blow out of the water good.
50-year low unemployment number, 3.5%.
Well,
the Fed chair, Powell, he actually said at the end of February that the fundamentals remain strong.
Yeah.
And so that was his quote at the end of February. So again, before the virus really set in with this panic that we're seeing,
right,
the underlying economy was doing well.
So I'm with Adam. I think that next week on the 18th, when they meet or before, we'll probably get another 50 basis point cut. They just want to make borrowing easier for small businesses that might need it, or for people just to keep pushing some spending out in the economy when the uncertainty is going on.
And I think that small business is the key. It's because they're the ones that are going to be impacted by a quarantine or any kind of slowdown. If people aren't going out and buying, that's who's getting hurt, those small businesses. So anything they can do to help them will have a better impact long term on the economy to get it recovered. So what's next? I mean, what's driving all this in the market? What do you see? It looks more to me like panic or pain selling, like there's kind of this compounding of, looks like people are selling, I should sell too. Is that what's going on here?
Well, we first heard about the coronavirus, I don't know, what was it, December, perhaps, when we heard about it in China. And we saw the growth rates in China in January, late January, and then the market seemed to kind of shrug its shoulders for a while. And then, even into March here, I was waiting for a bigger reaction from the market. Mm-hmm. But I think what we saw, and also a bigger reaction from our leaders, what are we going to do to keep it from spreading here in the U.S.? And to me, Wednesday night kind of seemed like the turning point for our country.
Right.
That was the evening that Trump went on TV to address the nation from the Oval Office, which I think is only the second time he's done an address from the Oval Office in his term. But, he gave his speech, and I think a lot of Americans believe that this was the first time that Trump took the threat of the coronavirus seriously. And in that speech, he announced new travel restrictions. He announced, and when he announced it, though, he made a little goof. He said, we will be suspending all travel from Europe to the United States for the next 30 days, which wasn't quite accurate. When the details were released later that evening, the rules actually barred foreigners who had been in Europe in the previous 14 days from entering the U.S.
Gotcha.
So there was a little bit of I've been following all of this on Twitter, which, by the way, I think Twitter is an amazing source of information, but it can also be a big source of misinformation. So,
correct. Yep.
But there's been there was some criticism there on how he handled that announcement, and it kind of seemed like a rush decision. And we heard the next day that he really didn't even consult with European leaders. But for the second night in a row, in addition to that, Americans were expecting some sort of an announcement about some economic stimulus, some sort of a policy that will help the economy as businesses shut down. Very little was announced. There's a few ideas, but it seemed very clear that politicians are divided on how they should be handling this. And what complicates it is it's an election year, right?
Absolutely.
Yep.
So we'll talk about that more in the show later in the show. But within an hour of that speech that evening, we found out that the NBA season would be canceled, suspended.
Yeah.
Now that's a big deal.
That's a big deal.
Think of all those players, all that revenue.
Oh yeah.
And so the NBA cancels, and then later we find out, a few minutes after that Tom Hanks has the coronavirus.
I mean, I think that's a bigger deal than the NBA. Because Tom Hanks is America's guy. He's as American as apple pie.
Yeah, but he got it in Australia.
I mean, maybe he was having some shrimp on the Barbie while he did that. But.
That might be. He was on an island, but he wasn't alone. That was a problem. If he would have been stranded on an island,
I think he was pretty good at that.
He would have been all right.
Okay, so sidebar, Wilson, the volleyball.
Yeah, named after you.
Named after me.
I thought so.
Yep.
So the NBA, what is interesting to me is you would wonder if they continued to have the games with no fans, if that would actually be a boost for their online or their TV ads, which then they could ask for more money from the TV ads to offset the cost. So I wonder, between the two, if they ran the analysis and wondered which one would make more sense.
LeBron was very vocal.
I know some of the key stars were not
and the fact
fans
that
of it.
So that the first player that now there have been, I think, 2 players that have been infected, but the first player who was really not cool about some of the way he handled that. But the first player who did that. They've been playing, so you don't really show signs for a while. They've been playing games and games for weeks.
Right.
Yeah.
And
so they would have had
all the
quarantine.
players, all the players that he's had contact with and all this stuff, that's been hundreds of players probably or whatever.
I think I heard something like 17 teams would have been impacted
crazy.
through all the.
And then travel. So everywhere they go, hotels, all that. I mean, that just extends that range.
reach.
So it makes sense. I always wondered, like, obviously they pre-sold all those ads. Are they going to refund those? How does, there's a lot of costs involved when you do something big like this.
Speaking of refunds, there's going to be a lot of upset people about a lot of things.
Yes.
Yeah.
I mean, think of all the things that have been prepaid. We had a volleyball tournament next weekend, big volleyball tournament in Indianapolis, 3-day tournament. We had to book our hotel room months in advance. They're going to refund it, of course. But even the volleyball club that we're part of, they've already paid for all these tournaments. And that's just a simple example. But, think about those that have season tickets to the NBA games, it's going to be a mess. But, back to your question, Josh, about the selling, what created all this selling yesterday? So we had the NBA cancel, and it seemed like that was kind of the domino, the first domino to drop, because throughout the day, the following day, we had so many other sports leagues and big venues announcing cancellations and suspensions. So, the list is pretty long, but it includes NCAA March Madness.
That's big.
That's huge.
Yeah.
Imagine the lost revenue there. Major League Baseball is delayed for at least 2 weeks. Soccer, Major League Soccer's on hold for 30 days. The NHL suspended their season. The PGA Tour is suspended. I heard that the Boston Marathon is postponed till the fall.
And that's crazy. So I have a friend at church that qualified for that, and he's planning on going. And so you think you train hard for this date, and you have a schedule on how you're preparing up for that. Now they bump it down the road, and so now you got to continue that training, and your body takes a lot of wear and tear for this. I don't know personally because I don't run anywhere near where those people do.
This gives people some time to enjoy some Twinkies and bonbons.
But do they though, or do they have to continue this regiment for longer? And what will that do to their bodies?
Right.
And now you're running in a different season.
Right.
So a lot of things change, and for something like that, that may be your one lifetime dream to qualify for this, and now it may put it in jeopardy on, can I actually do this the way I was hoping to? We
were talking last night at dinner. I think one of the things that really, just kind of saddens me the most is just look at all these high school kids that right now we're heading into the state basketball tournament. And I'm a big basketball fan, and seeing them, it's every high school basketball player's dream to play for a state championship in front of a packed crowd, and win a state title. My daughter was on a state championship volleyball team last fall, and I can't imagine if we would have played the whole season and then knowing that we had the potential to win the title, and then the whole event gets canceled.
No one's there.
Yeah.
Or it's canceled. Exactly.
So there's a small town down the road from us, Columbus Grove. Their high school boys basketball team is something like 25 or 26-0. We have a client with a son that plays, and they've had a great season. I think everybody thinks they have potential to win state or at least get to state, anyhow, I just feel bad for those kids because who knows if they will ever have a chance to play that game, and even if they do, the schools have now canceled all activities for 3 weeks, so they can't practice.
True.
And everybody's going to be a different team. It's just going to be a different environment if it happens at all. And so I just feel bad for those kids that have worked hard for a goal but it's also a life lesson, right?
Yep.
We can't control these events that happen, but we can certainly control how we respond to them. So, Broadway shut down.
I know.
Unbelievable.
Actually, so my wife so we've been to some Broadway shows, not on Broadway, but like in Columbus and Toledo and Chicago, wherever we're at, we'll like to do that. Well, she's like talking about, I think Lion King is coming to Toledo. I'm sure it's all going to be.
Yeah, it's been on the TV. Every time the song starts, my youngest daughter looks up.
We went and saw Lion King in Columbus, I think 5 or 6 years ago, and it was amazing. So she's like, yeah, let's go. And I don't think we're going now. I think that's going to be shut down. But yeah, I mean, there's a lot of cultural impacts now that things are shutting down as well. So like any expo in the country, pretty much, where there's a bunch of people gathering, not happening.
Not happening.
And one of the big things is the happiest place on earth.
Yeah. So
It's
Austin,
no longer going to be so happy.
you know, we're all Disney fans. We've been following the stock, the business. It's a company that we think is well run, and you know, they just added Disney Plus, which is good for this environment. But what about their theme parks closing? What's the impact to Disney?
I mean, Disney's operating income is over half coming from their theme parks, and they've got theme parks all around the globe. So first of all, they have 2 theme parks in China. Those have been shut down for a while. And now I think they're like limited reopening with people limited a number of people with having to wear masks all the time and stuff like that. There's one in Japan that's shut down. I'm sure France has a lot of cases, so I'm sure that one's shut down. And as of yesterday, at least the one in California, and I'm assuming Orlando will follow suit, are going to be shut down too. So big part of Disney's profits are coming to a halt for a little bit.
Okay. So I know your listeners are asking the question, what if I own Disney stock? What does this mean for my stock?
Yeah. Well, in my opinion, and we follow Disney pretty closely, I think that people are crazy about Disney. You know, people go there and spend obscene amounts of money, and this is probably going to only push back. So it's going to be delayed revenue. This revenue is going to come. This profit is going to come, but it's going to be pushed back 6 months, a year, whatever that looks like. You're still going to take your trip to Disney. It's just going to be a little bit down the road. They're going to let this kind of uncertainty pass. So we feel like Disney fans are strong enough of fans and care about doing that with their kids that they're going to do it. It's just going to be a little bit.
So look past the short term.
Exactly.
Probably a hit to earnings in the short term.
For sure.
But long term,
the thesis is
maybe even an opportunity.
And
the other factor, though, too, is ESPN.
Yeah.
You know, with all these cancellations, the other part of Disney's revenue is ABC and ESPN, and that's the other piece, you know, that's factoring in. So, yeah, there's a lot of short-term issues going on, but in the long run, you know, they're a big media company that has a lot of different sources of revenue, and I think, again, you know, if you're a long-term investor, it's still one to consider.
I actually read an article this morning that this could be the opportunity that Apple was waiting for to buy Disney.
Wow.
Disney stock's down. It's in the 90s.
They could buy a lot of companies right now.
Apple's sitting on more cash than they know what to do with.
They've been waiting for a time like this.
Exactly. And with Iger not being the CEO, it could open up some discussions, but he's still on the board. So, hey, I'm just saying that's on the table.
Yeah.
Sure.
Between Apple and Berkshire and all
you read that on Twitter where everything's true, right?
Everything's true.
Yeah.
Any company that's sitting on crazy amounts of cash, I think of Apple and Berkshire specifically, they can go shopping and get a 30, 40% discount or more if you're looking in energy and banks. So.
It's going to be fun watching to see what Buffett bought.
Exactly.
So, bottom line here, I think, is, you know, the impact of all these cancellations and shutdowns is definitely there's going to be lost spending. There's going to be a hit to profits. There is going to be an economic impact. You know, and then furthermore, at the end of yesterday, we found out here in Ohio that our governor has banned most gatherings of 100 or more. And not only that, but K through 12 schools will be canceled for 3 weeks beginning Monday.
Yeah, that's crazy.
It's crazy.
I think those people. So first of all, that has a huge impact to people who work, parents who work.
Yep.
That is going to be a challenge because that is, you know, that their children are at school a lot.
Yep.
So that's a big deal, and all the business. There's a huge impact.
Yeah, and for the kids that's their only meal in the day, eating lunch at school. Now, that's one of the big concerns is what do you do for these kids who that was their source of food during the school years, that lunch at school, and now they don't have that either. And so providing for those kids and making sure that they're cared for, because sometimes the parents don't have the option to stay home with them. They got to find an alternative. Now, I did see online a lot of parents who have high school kids offering their kids who babysit that during these 3 weeks they are available, that if parents are in need, and again, the kids get to make some money, awesome, but they also are available then to help those working parents who say, you know, I got to be at work from 8 to 5. Can someone watch my kids during that time? And so, you know, I've been seeing some cool innovation there, and some of the kids, take advantage of that. Instead of a kid saying, "Hey, I'm out of school for 3 weeks," they're saying, "How can I help and also be productive and do?"
Although
something?
I'm not sure it's a complete vacation
Right,
for
so
the kids.
they may have to
I think
be
They
there
still have to do
some.
some school.
they're
work.
still
But
figuring
if they're
this out.
there, but if they're there with a 4-year-old or
Right,
whatever
yeah.
because their daycare is closed, they could probably do both. I would assume.
Now, DeWine did, that's our governor here in Ohio, he did specify that this is not a mandate for religious gatherings,
Right.
but, and I think this is the case for all three of us, I think all three of our churches have said no in-person gatherings for that for this period of
Right.
time anyway.
Yep.
So we're going to have an online service.
Yep. We are
at
too.
least through the time school's out. So I think that's going to be interesting, and I think that's an area where our church leadership is taking precaution and trying to be prudent and ahead of the game. Where it's not we have a constitutional right to meet, but it's maybe not the most wise thing to bring all those people together right now.
Well, and for a church, you hate to think of it like this, but I'm on the financial advisory team at the church. Now, a lot of people have went to online giving or
Right.
regular monthly bank drafts, but there are a large number of people that still put money in the offering box every
Yeah.
week.
There will
And
be an
so
impact.
if the church is closed I know anytime we have bad weather and lower attendance, that week has an
ding.
impact to giving.
Yeah.
And if the people that attend the church are impacted economically, that could also be an impact. So hopefully our churches are prepared for something like this. And again, it's nothing I'm overly concerned about, but it is something that will be an impact.
So I've heard that people are panicking and buying up a bunch of toilet paper. This is even
True story.
all around the country, but I know this is the case in Findlay. And I think that is crazy because unless this coronavirus scare makes you like crap your pants, it seems like overkill. You're not going to
You
use
have to see that as a symptom of the coronavirus. I don't know what's happening.
Any more toilet paper
Yeah.
than you would on a normal day.
Yep.
So I think that's a little extreme.
Josh, you have some friends or
Yeah, so
acquaintances.
a neighbor of ours has a friend in Italy, and she was sharing with us a message they were sharing back and forth. But the lady in Italy was kind of talking about how they've been in a quarantine for multiple weeks since the end of February, and how they still have the ability to go to the store, and their store still has stuff in it. And she made the comment that we have toilet paper. I don't know what you guys are doing over there.
They're in actual
they're in
quarantine.
actual quarantine. She lived in the northern Italy. So my wife was just sharing with me that message she was showing me, but I just thought that was hilarious. Is kind of the question was, what is going on over there with you guys? Like, what's this panic on toilet paper?
Yeah.
So you mentioned Italy, and I think, we see pictures and read stories about how bad things are and the fear that it's going to be that bad here. What can they do, Josh? Can they still go to the grocery store and the pharmacy?
Yeah, so the way and I just read this message my wife passed on, but the way it was is they have the ability to go outside. They have the ability, they take walks in the evening. They go to the store when they need something, but it's just, in a sense, saying, be smart about this. If there's a need, you go get the need and you come home, but don't interact and avoid a contact with people as much as possible. And so kind of that the kids are home from school. That's similar to what we are experiencing now with this closure. But in general, it's not like you're stuck in your house, windows closed, don't leave. It's more just, hey, all unnecessary stuff is eliminated.
This is like an introvert's dream.
Yeah, it really is.
So I guess we should think about what a quarantined economy will look like here in the States, because I'm not terribly old, but in my lifetime, this has never really been a case that we've had to deal with. So it's kind of unprecedented in the U.S. But I feel like with kids out of school and many people working from home, people are just going to act differently. They're going to spend their money differently. Those are definite realities that we're going to see. I really think that this could see kind of a return to more cooking at home versus eating out, because you're going to be afraid of people running into people and big restaurants full of people and all that stuff. And I love cooking, so I think that's going to be pretty good. I think that's going to continue that.
We'll be over for dinner.
It's good stuff. I'll make something good. I'll tell you what. I think that this could mean more streaming movies on your TV instead of going to a movie theater. I think this is going to make people continue to increase their reliance on e-commerce and buying things online. So they're scared to go to the store. Whether they should or shouldn't be, they're going to be scared to do things. But some things are going to remain. You know, I think that you're still going to need to go to the store to get your toilet paper or whatever that might be. Milk, things that you really can't order online, you're still going to need to go to Kroger to get, or whatever that might be. So it's going to look a lot different. The risk, I think, though, is that people won't take this seriously, and that maybe after a week or so, people are bored out of their minds and just decide to go do whatever they want anyway.
Right.
I
mean, how long can you put America on lockdown?
Like, we're the land of the free and the home of the brave.
Yeah.
I'm going to brave the coronavirus and be free to do what I want.
Yeah,
I've had the flu before. I survived it, right?
It can't be that bad.
And that's part of the issue is there's high-risk groups of people and low-risk. And if you're thinking selfishly, you say, hey, even if I get this, the chances are small that it drastically impacts me. So what am I worried about? But the chance that you could pass that on and not realize it to somebody who could be drastically impacted. So it's that matter of, the selfish, well, I shouldn't have to worry about this. Why is it affecting my life? To what could I do to help others from having this drastically impact them? And that's going to be the big issue is how long will people selflessly sacrifice kind of that freedoms they could have to help other people?
I think that we really can't continue this discussion without mentioning oil.
Oh,
oil is
absolutely.
a huge driver of the economy, right? So we saw over last weekend that Saudi Arabia announced that it would drastically increase oil production, which is the opposite of what you need to do when oil prices are down. That's not good. So that sent oil prices down further.
So why'd they do it?
Well, they did it in response. So Russia pretty much said, nah, OPEC, I don't want to cut production. As OPEC said, you should probably cut production because of this oil price slide we've been seeing. Well, the slide turned into a drop. And overnight, oil prices dropped 30%, which means every stock involving oil in any way, shape, or form was just crushed this week. That's not good. And we are in Findlay, Ohio, and Marathon Petroleum is across the street from our office. Mm-hmm. So we watched that stock go down for a lot of time. And a lot of this is due to people anticipate oil demand being weak in this time of uncertainty. And then the oil demand being weak causes prices to be weak. And then creating more supply causes prices to be weak. It's kind of a self-perpetuating downward spiral of oil prices. So that's not good. And also, people watch high-yield treasury spreads as kind of a recession indicator. And a lot of the high-yield bond market is oil companies. And when their source of revenue, selling of oil and petroleum products, comes down, they become more risky on paper all of a sudden. So the yield has to be higher to accommodate investors for that, while treasury yields are stupid low. So that spread has gotten really, really, really wide, and that has really caused more people to be even more scared. So that caused on Monday the first of 2 circuit breakers that tripped in the first few minutes of trading in the stock market.
So what is a circuit breaker?
Well, a circuit breaker is something that has been implemented into our trading system where if there is a sudden drop in the market, a quick sell-off, that this will pause trading for 15 minutes and it just allow everybody to take a breath. So, and again, when we talk about the automation, there's a lot of things that can trigger. And if you're not aware, you could have stuff trigger that you may have stopped because you did not want this because of a real quick downward move. And so 15 minutes, trading is paused. And then once it restarts, that circuit breaker won't be triggered again, and the next one has to be triggered. So 7% is the first one. Yep. So if you hit 7%, 15-minute pause, then it reopen the market. If it hits 7% again, it doesn't pause because that trigger's already happened. The next one's 13% and then 20%. This happens throughout the day up until 3:25. Why they chose that, I don't know. Why it couldn't be 3:30, who knows? Probably because they were looking at 59.5 and they'd like to confuse people. But after that, then it won't pause for the rest of the day. That 20%, I think, actually closed the market. Is that right? When it hits that?
Yeah, I think 20% closes the markets for the day, which is to give investors a lot of time to think about what's really going on.
And this week was the first time it triggered since 2008, and it happened twice. And so we had 2 different times that just the 7% one was triggered. So it's just the downside protection of, again, panic, like the idea that there's compounding on maybe irrational or things that don't necessarily have any fundamentals behind it for the sell.
Do you think it's possible that we could have so much panic in the market or so much selling that they actually close the markets for a cooling off period?
Well, there's a lot of discussion right now around shutting down the NYSE. Now, what that on paper sounds like is that stocks will not be able to be traded, right? You're not bringing together the buyers and sellers at an exchange. The reality is that the shutting down of these stock exchanges is likely a precaution for safety for the traders on the floor, and that the stock market would revert to electronic trading only. Mm-hmm. So I do not feel like we're going to all of a sudden stock market's going to be, you can't buy and sell. Yeah, I don't think you're going to not be able to buy and sell stocks. I don't think that is really a reality, but I think that we could see, especially in New York, where there's a lot of cases and it's a state of emergency or whatever, that you could shut down the actual physical stock exchanges. You'll just go to online trading. So I guess we should talk about the economic impact and the areas of the economy that stand to be most impacted and least impacted through this. I think that at a very high level, I think that things that will drastically cut back on buying during these times of panic are going to get hurt the worst. So that would be travel. We've seen that with airlines and hotels, and
most airline stocks are down 50% already.
And obviously oil stocks, the drive. Mm-hmm. Travel is hugely impacted and tied to the oil stocks, so that's crazy. Restaurants probably stand to have some risk.
Cruise ships, apparently.
I hear cruise ships are not a good place to be, so probably hold off on booking that cruise, even though you could probably get a heck of a deal right now.
Buy 1 week, get 2 free.
That's right, in the quarantine.
if you're willing to... So I wonder if you get the coronavirus and get healed, if you're immune the second time.
You're pretty much like...
So you could do whatever you want. Yeah, you can go around the world for $5. But really, anything discretionary is going to be impacted. But there are areas that stand to be lesser impacted or favorably impacted, and those would kind of be, obviously, businesses relating to medical businesses, hospitals, doctors. Those are going to see a lot of action, probably do okay. Pharmaceutical companies, either in the treatment and vaccine and drug development for this actual case or other cases, probably going to do okay during this. E-commerce companies, people are going to be crazy about that. Telecommunication companies, because people are going to be communicating from home, for school, for work, for whatever that is. Those can all stand to gain, as well as consumer staples companies like groceries and discount stores. Those are probably going to do okay too because of the panic buying. That's not necessarily due to fundamental changes. That's due to people going crazy. And those are places that could do okay. So Adam, what is a bear market?
So, yeah, a bear market is a drop of 20% or more from the most recent all-time high. So you might hear the term correction. A correction is a 10% drop. So we've had several corrections along the way. Bear markets, now we did have a drop in 2011 when Standard & Poor's downgraded the U.S. debt rating. Summer 2011, we dropped 19, but never 20% on a closing basis.
Right.
And then the fourth quarter of 2018, that's when we dropped, we had a 19% decline. I think it was 19.8. So some have rounded it up to a 20%, but, and that bottomed on Christmas Eve, 2018. But never broke that 20% number on a closing basis until yesterday. So yeah, that's the magic number. And history says that the average bear market, some are worse than others, of course. The average bear market does have about a 30% drop.
If you're rounding, we're getting there.
We're getting real close. Down 27%.
So what do you think about this one? Is this, I mean, have we seen it? Is, like you said, the market this morning is looking up. Are we heading back up from here? Do we see the bottom?
Oh, so you're going to ask me to speculate, make a prediction.
I want the exact number.
That's right.
Go for it.
Okay. All right. Well, we all want to know, don't we? We're all bottom fishing right now.
That's right.
You know, if you have some cash, you don't want to buy until you're at the bottom.
Right. The exact bottom.
But reality is that no one can accurately forecast that consistently. That being said, I know people love to hear opinions. And so I'll give you my opinion with all the disclaimers attached, of course. But, you know, my crystal ball says, look, if you look at the momentum and the powerful move that we've seen down this week, it's been pretty violent selling.
And last week, the last 2 weeks.
Well, yeah, since just in the past, 17 days or so.
Right.
I really think it's too early to call this a bottom. even though we're seeing a bounce today, you're going to see those throughout the bear market. 2008, 2009 saw a lot of big up and down days, just like you're seeing now. But I think what the market really wants here is they want to see an economic stimulus package from the government. And until we know what that looks like, we just have too much economic uncertainty. We also don't know, what the spread of the virus is going to look like. Looking at the initial growth rate in China and the brisk spread that we saw in less than 3 weeks in Italy, we've seen just a glimpse of what other countries face if they cannot slow that contagion. So I do think we are taking the right steps by canceling everything. Do I like it? No, I don't like it at all. Will it hurt us economically? Yes, it absolutely will. But the problem here that we have is we just don't know how long it's going to take to ensure that this is under control. So I think the key right now when, as an investor and trying to determine the extent of this bear market, really is there's just too many unknowns right now. So for that reason, I do expect to see at least another 10%, maybe 20% down from current levels. The market hates uncertainty, and we have a lot of it right now. Until we get some good news, and we will get good news. Okay.
Sure. Yeah. It's a matter of not if.
It's a matter of when. History tells us that we will prevail. But until then, we have to brace ourselves as an investor, prepare yourself for more downside, plan ahead. How are you going to react to that? So, to talk numbers, okay, I think a good test for the market will be that December 2018 low. We talked about that
Christmas Eve.
Yep.
Christmas Eve 2018, exactly. So the S&P level was right around 2350 at that point. If we can stay above that level, it will act as support. And if we start getting better news off of that level, I think you could look at that as a buying opportunity.
Oh, yeah.
This would be a total drawdown of about 31% from all-time highs that we saw just a few weeks ago, but only 4% down from yesterday's close. So we're not that far away from that number.
Another unhappy day like yesterday or whatever.
And you'll be there.
Take it right down.
Yep.
So speaking of that, though, we got some questions in
Sure.
from users, and one of them was, what are some dumb moves in this market?
Some dumb moves. Well, I think the one that came to mind when I first heard that question was, so, everybody working from home, many of them are using Zoom to, run their virtual meetings. So Zoom is software that allows you to, basically video conference and share your screen with each other. And there's another stock by the same name. And people are buying that stock instead of the actual Zoom stock.
That is a dumb name. Yeah. Or a that is a dumb move. That's
dumb move.
Yes.
So if you're going to speculate, know what you're speculating in.
Do your homework.
Do your homework. You know how many times I've seen people make the mistake of buying something without doing their homework.
Yeah.
And, I mentioned Twitter. I really do like Twitter a lot. And I'm getting a lot of information from Twitter before I get it from anywhere else. But there's also, you have to look out. There's a certain sector on Twitter, if you follow stocks on Twitter, that are pumping stocks and they're promoting stocks because they own them. And, if you just take random tips off Twitter without doing your own homework, it's like, taking your investing tips from the cocktail hour at the after hours receptions.
I think, taking buys and sells of the market or specific companies from social media is very dangerous in this environment. So it's best to kind of keep your hat on where you're keeping an eye on things and doing your due diligence on all of your moves that you're making. So Adam, as investors, what technical factors are kind of going to indicate that we're headed back into a bull market, or that things have bottomed and are kind of turning around?
Yeah. So, I think fundamentals are one thing. We know the fundamentals were strong before we had this bear market. So economic fundamentals, that is. And so I think the market has legs to stand on economically. We weren't, some people say, well, the market was due for a correction, correction maybe, but a lot of people say, well, I saw this coming because of last year's gains. Well, I think that those gains were justified with the corporate earnings growth the way it was. But I think, so now we have the fundamentals. We certainly need to see companies, rebound from this, but the market looks ahead. We haven't even hit a recession yet, and the market's telling us we're going to have one. And so the market is forward looking. And so as far as, looking for the end of the bear market, there's a couple things you can look at. So I think the simplest, I'll give you just a couple simple things to look at, and those are moving averages. So a moving average is just an average of the last days of price. So for instance, the long-term trend can be designated by the 200-day moving average. The 200-day moving average is the average price the market has traded at the last 200 days. And that is often seen as the long-term trend. If that average is sloping up and if the current price is above that line, that's a positive indicator. Well, right now we're below the 200-day moving average, and the 200-day moving average is falling. If you see that turn around, that's a good signal that the long-term trend has changed. But if you're just waiting on that, it could be too late. It's a slower indicator. So you can look at things like the 50-day or the 20-day moving average, and the same concept applies.
Yeah, I think that, and I think it's probably also to understand that, at least my opinion is that the economic impact of what we're seeing right now is probably going to be shorter than we saw in the last big bear market and B recession. Yeah. This is something that after a couple quarters, 3 quarters at the most, who knows? It's going to be a lot shorter than the last recession we saw. Things will pick up because the underlying fundamentals are way stronger than they were back then.
Yeah, that was another question we got. I think people, this is too reminiscent of 2008, and people want to know, how does this compare to 2008? And so, what do you see, Austin, watching this every day? How do you think we compare economically to 2008?
Yeah, I mean, we don't have the structural issues as an economy with the banks getting crazy out of leverage and stuff like that than we did in 2008. So I think that we have a lot of tests in place that should prevent sort of a financial crisis from occurring, which is really, really good. I also feel like with unemployment at really, really, really low levels, that once people can kind of get back to work and through all of this, they're going to have a lot of money to spend and things are going to be going pretty well. So should be a little bit shorter, but we've got to get through the uncertainty before it's going to make any difference at all. So I think once we get through that, I think that you'll start seeing things improve in the third quarter this year. I think after the second quarter is going to be the roughest for sure from the big impact here.
Yeah. Sure. And I think, talking between the recession and the bear market we're going through, the big question is like, what does this mean for the average investor? Like what changes, what should be happening? And, when we talk to young investors, like this is an opportunity. If you are adding to your retirement accounts, if you have every paycheck money going in, you're dollar cost averaging through this. And that's the best thing you can do in this downturn is you're buying things at a lower price, or in a sense, you're buying more shares every time because they're cheaper. So dollar cost averaging is a great thing to do, especially when you're a young investor. It gives you a lot of time for this to grow through. Tax loss harvesting, things are down. If you need to offset some gains, you could sell some stuff with not the idea that you're selling because you're panicked, but you're selling to take advantage of some tax situations. Roth conversions, moving money into a Roth IRA, again, at a lower value is a nice tax advantage. Again, we're just talking tax impacts here because, again, you're moving money that's invested in an IRA into a Roth IRA. So you're still going to be invested. You're just doing it at a lower tax cost than you would have a couple months ago. There's a lot of things out there that are now an opportunity that weren't 2 months ago.
True.
Right.
And then for someone looking to buy a house with the rate cuts,
big opportunity.
Yeah, refinancing or getting a new mortgage. It's cheap. If you're locking in this rate for 30 years, man, you're going to be happy you're paying this fixed rate instead of waiting.
Never a better time to buy a house than now.
Right. And again, now, is not the best time, but now is a time to look at your risk tolerance. Now, we don't suggest you make any changes, especially if you're reducing your risk. And now is not the time to do that because things are down. So if you're reducing your risk, that means you're selling your equities.
What do you recommend, Josh? Say somebody is experiencing a little bit of pain right now and saying, I wish I was lighter on my stock allocation and I'm worried things are going to get worse. Do you recommend that they make an adjustment now, or what would you tell them to do?
If you've stomached through this 25% drop, the that's a big drop already. If you could sit through for the rest of it and let it recover, that's the best time to make an asset allocation adjustment.
And it might be counterintuitive, but if you've got more of a balanced asset allocation, your stock portion, your equity portion is way
underweight
down. So this is actually probably a better time to pull some out of your fixed income and into equities because they're down so much, which it's not what your stomach wants to do.
Yeah.
Especially with rates where they are, if you're a long-term investor,
right,
and this is money you're investing for the long term, and you've had some money in bonds, now could be a great time to redeploy that capital into the stock market.
Yeah. But if you are really concerned about it, we talk about dollar cost averaging in. Just readjust where that money is going.
Right.
Build your fixed income side or your preservation side up by new money. Don't change the stocks out. But if you really are panicked about it, just readjust where you're putting new money in.
So I think, we a lot of the advice we give is for people who are accumulating assets or still working. But what about those, Josh? I know you meet with a lot of people. One of the things we do a lot of here is help people transition into retirement and then build a stream of income that will last a lifetime. Josh, what would you say to the person who was planning to retire this summer?
Yeah. So if you're planning to retire this summer, hopefully you've been talking with a financial advisor and working through a plan. And hopefully they've tested that plan against different situations, including what if the market drops heading into your retirement, because that's what we consider a bad timing situation. Is your accounts are down in value, you're no longer adding new money to it, and your income goes away. So now I'm drawing money out of the portfolio. Right. Testing against those situations hopefully will give you the peace of mind that worst case scenario, I've already looked at that simulation and it's still okay. But if you have the flexibility and you can work a little longer and let these markets recover, that's the best choice if you have that option. Like if you're able to say, you know what, I'm going to postpone the retirement for a couple months, 6 months, see where the market's at, see if I can get a bounce back in some of my assets. But the other thing is heading into retirement, having a cash piece where my immediate income needs are covered in something that's not exposed to this volatility. And for a lot of our clients, the talk is about having this cash reserve where if the markets are down, I stop pulling money out of the market and I start living off of a conservative or a cash piece where I don't care what the market's doing because I'm not touching that money for a set time period.
So Adam, kind of wrap it up here for listeners, and let's reassure people and leave them on a positive note with where we feel about how things are going to get better in the future, and kind of talk about some of the very, very practical behavioral things that you can do at this point in what we're seeing in the markets right now.
Absolutely. Yeah. We certainly want to remind people that this is the time to be optimistic. This is not the time to allow fear to dominate your investment decisions. Morgan Housel yesterday published a post, and we can link to it in the show notes. But I want to quote one portion of that post that I think is very critical for any investor to keep in mind during these times. And that is, uncertainty shrinks your field of vision at the worst time. When the world changes in a 24-hour period, it becomes hard to think more than 24 hours ahead. The year ahead is impossible to envision when assumptions you had at breakfast time were destroyed by dinner time. The irony is that long-term thinking is most powerful when everything is falling apart. The majority of long-term results are determined by decisions that you make during a minority of times, and right now is one of those times. It's a tragic moment to become short-sighted. So, what I would say is get the long-term charts out, remind yourself that we've been here before, and it's always hard to know how you're going to respond to risk until you actually have to respond to risk. And I think there's just so much happening right now that you just simply can't control. There's no use worrying about those things. The list is way too long, and you'll end up with analysis paralysis, or you'll make some very bad moves. I think now is a time of opportunity. A lesson I learned years ago is to focus on the inputs and your response to certain events. So something I learned from Ohio State football coach, Urban Meyer, he hired a guy named Tim Kite during their championship season. And they operated by the following formula that year. E plus R equals O. And that is event plus response equals the outcome. So we can't choose the events that happen to us, but we can choose how we will respond And the way we respond to those events will ultimately determine the outcome. So using history as our guide, our response to a bear market should be to stay calm, stay focused on your long-term goals, and look for opportunities. I wanted to take a moment and share a story about a bear market that I turned into an opportunity. So, I mentioned at the beginning of the show, starting my career in August 2002. So we were actually in a bear market at the time. So the S&P 500 had reached an all-time high, I think it was around March 24th of 2000. And so we were more than 2 years into a stock market decline. So it was long and painful. But if you look at the price from March of 2000 to August of 2002, we were down about 40%, 39%. And we started a business in a bear market. And I think just imagine with all that's going on, look at the possibilities for innovation. Think about, the greatest breakthroughs of our history have come from times like this.
Yeah.
They've come from challenges that seemed insurmountable. I mean, look at the news this morning. We got news that Roche came up with a coronavirus test that will allow them to get results 10 times faster than any test before.
That's awesome.
And I'm waiting for someone to come up with treatments or vaccines for the coronavirus. But, there's just so much that we can innovate. How can our healthcare system improve as a result of this? We're going to learn from this.
Oh, I think so. I think we already have.
So it's a time to turn it into an opportunity. But also now's the time to take advantage of depressed prices in the stock market.
Oh yeah. If you have dry powder or cash,
absolutely,
this is the time to be very aggressive with your buying.
So, if we just look at history as our guide, our response to a bear market should be just to stay calm. History does tell us that if you would sell at these levels, you'll look back in 10 or 20 years and regret it.
Yeah.
So I wrote a blog post about 10 days ago called The Coronavirus: What Should Investors Do Next? And we'll link to it in the show notes because I think everything still applies. Even though we're lower in price than we were then, my conclusion still stands. You wouldn't be human if you didn't fear loss. Mm-hmm. And smart investing can overcome the power of fear by focusing on relevant research, solid data, and things you can control. Investors who have the ability to tune out the news, focus on their long-term goals, and turn declines into opportunities are better positioned to succeed with their investment strategy. Stay calm, focus on those things you can control, and that's how you're going to achieve your goals. The odds are pretty high that in 2030, we can sit here and have a reunion show and look back on this moment today and be thankful that we resisted the urge to make an emotional decision in times of turmoil. And lastly, I want to leave you with this. I do think that most people need the help of a financial advisor who's been trained for times like this, who's going through the process of being certified as a financial planner, who has some sort of credential and has experience. So if you don't have an advisor, hit us up. We're happy to talk to you. And if you do, that's great. Call your advisor if you have questions.
Yeah. And that's key is if you're worried about doing this yourself, there are people out there that love doing this and love helping people. You're not in this alone. And if you are struggling, reach out to somebody that is in this industry that is a professional and is able to help you. That's what we love doing. That's what we're here for.
And this is the time in a market where financial advisors really are in their keep.
Absolutely.
Because what their goal is in this time, it's easier to take a more passive approach in a very, very strong bull market. But in times like this, when things are down, this is where an advisor is going to talk you out of making a bad decision that is going to impact your financial future and your plan for the rest of your life, potentially, if you do something really, really stupid.
Absolutely. And, Josh wouldn't share this, but I'll share it for him. I watched him yesterday get on the phone all day long, call after call, reaching out to clients, asking them, how are you feeling? What are your concerns? And those conversations are very important during times like this. Clients want to know that we are watching things and that we're here to help. And so yesterday morning when we had our team meeting, I saw our advisor team say, now's our time to shine. we're going to get out there and we're going to talk to people. And Josh, what are some things you heard from people yesterday?
Yeah, the nice thing is pretty much everybody I talked to, I can't think of an exception to this yesterday, is they were thankful for the call just as reassurance. They wanted to make sure I'm not missing anything, right? I'm doing the things we have been talking about. And it was that reassurance of our long-term plan still in place. Your long-term goals are still achievable if we stick to the plan. And that was the reassurance that they needed. It wasn't, here's anything crazy we're doing, anything special. It's just, let's go back and say, okay, where are we at? Where are we going? And are we still on the right path to get there?
Adam, I know this has been a heavy topic.
Yes.
But because it's Friday, I think we should have a dad joke of the week. The second dad joke of the week.
Yeah. Special dad joke.
A dad joke.
Even on a coronavirus episode.
Okay. Well, I do love telling dad jokes. Sometimes he even laughs. So why is it so hard to tell a joke to retired people?
Why is that?
Because none of them work.
That's good.
That Josh is going to write that one down.
I'm going to keep that one. That's a good one.
You could use. Well, Adam, we are so thankful that you were able to take some time because it is an all hands on deck.
No. I am thankful for you guys. And so before we go, I brought a gift for you guys.
Uh-oh.
You ready for this?
I didn't know it was a gift day.
Oh, man. And I didn't bring anything for you.
Yep. I buy gifts in bear markets. So here you go, guys.
Oh, boy.
Whoa.
So for all the audience that can't see, which would be everybody, Austin and I are getting Dow 30,000 shirts from Adam, and so we're in anticipation for
the bounce back.
The bounce
Dow
back.
30,000. Okay, so the shirt. What color is the shirt?
Green.
Green.
Green. Aren't you tired of seeing red?
I know. Let's be
We're
bullish.
going to get some green around the office
That's
today.
right.
So Dow 30,000. I mean, that was reachable just
We were close.
2 months ago,
Yeah.
and you know what? It's a reminder that Dow 30,000 is still a number we will hit one day. There's no such thing as an unrealistic goal, just an unrealistic deadline.
It's a reminder that the best is yet ahead.
Yep.
Absolutely.
We're going to come through this
The
as
best
a country,
is always ahead.
as an economy. It's going to be better.
So
Let's do it.
We'll
wear it
appreciate
proudly.
it. I will.
That's awesome. Well, as always, especially in times like this, don't hesitate to check out our website because we've got a brief list of 8 timeless principles of investing that are really going to try and keep you on track in times like this where things are uncertain, moving every day, huge swings. Check it out. It's free on our website.
And make sure you share this podcast, especially if you know anybody that's been asking about this bear market, recession, or anything going on. Share this with your friends and family. Send us any questions or ideas you have at hello@theinvesteddads.com, and make sure you like and review us on Apple Podcasts.
And in case you missed it, check out our recent episode where we discussed streaming services.
All right, well, thank you, Adam, for joining us, and we wish everybody a good and safe weekend.
Thank you.
Thank you for listening to the Invested Dads podcast. This episode has ended, but your journey towards a better financial future doesn't have to. Head over to theinvesteddads.com to access all the links and resources mentioned in today's show. If you enjoyed this episode and we had a positive impact on your life, leave us a review, click subscribe, and don't miss the next episode. Josh Robb and Austin Wilson work for Hicks & Zuercher Capital Management. All opinions expressed by Josh, Austin, or any podcast guests are solely their own opinions and do not reflect the opinions of Hicks & Zuercher Capital Management. This podcast is for informational purposes only and should not be relied upon for investment decisions. Clients of Hicks & Zuercher Capital Management may maintain positions in the securities discussed in this podcast. There is no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Past performance may not be indicative of future results. Indices are not available for direct investment. Any investor who attempts to mimic the performance of an index would incur fees and expenses which would reduce returns. Securities investing involves risk, including the potential for loss of principal. There is no assurance that any investment plan or strategy will be successful.